Hi, and welcome to our channel, Pay Down Debt Solutions. I'm Jen. Today's a great day. Today's a great day because America made a decision on the next president of the United States. And all I want to say is, regardless of what side of the aisle you sit on, or if you don't sit on any side at all, I can tell you some good news. And the good news is, I've heard that this president is going to look into credit card interest rates and is considering capping them at 10%. So that is amazing news if that actually happens for us. And like I said, doesn't matter what side you sit on, that's fantastic, okay? So today I want to get into something that affects everyone, okay? Number one, it's credit cards. And number two, it is financial stress, okay? Financial stress is real. We all know it's real because we're sitting here right now. You guys are watching this channel and you feel stressed financially. Whether you're sitting there in a pretty decent position and just want to learn different ways to maybe handle your finances, or if you're sitting on the side of, oh my God, what do I do? I have so much debt, I can't climb out of this, okay? So no matter where you are, this is a great channel for you to watch, because on this channel, we teach Velocity Banking. And we teach Velocity Banking using the Pay Down way. So Pay Down is our company. My husband and I created it, and we created it and brought it to you because we found ourselves a few years ago in the same position many of you are in today. We found ourselves making payments upon payments upon payments upon payments, and as business owners, we were just drowning. We were drowning in the payments that we were making. And I talk about this all the time, that I am an ex-banker and an ex-branch manager, so I come to you with financial knowledge, right? From the knowledge and the standpoint of knowing what the banks do and how they look at banking and credit and loans. And I've said this before, your bankers are salespeople, right? Your bankers are salespeople. Yes, they're there to help you, and yes, the bank has amazing tools for us, but regardless, these bankers are salespeople, and so they're going to look at putting you in products that maybe are not the best for you, all right? So when we look at Velocity Banking, we look at lines of credit, okay? And specifically revolving lines of credit, okay? Revolving lines of credit we also call them RLOCs, are credit cards, and credit cards is our focus today, okay? The scenario that I'm bringing you today, the client that I'm bringing you today, is in the scenario of being able to use nothing else but credit cards, all right? And so we're going to talk about her financial stress, and we're going to talk about the use of credit cards to get her out of it. So the credit cards and the RLOCs, or I should say that RLOCs encompass credit cards, home equity lines, personal lines, business lines of credit, okay? And so these are the tools that we use when we talk about Velocity Banking. Now, why do we not use loans? Well, because loans, again, are another tool out there that the banks use, okay? They're their tool, they're not our tool. Those loans are bank tools, just like mortgages are bank tools. And I always call them, the devil's instrument, right? Because they're there, they're amortized, and that means that all that interest is front loaded. So we are caught up in the payments that, Dan, like that I talk about, that Dan and I were feeling, the stress from all the payments, because those amortized loans feed those banks interest. And what are banks in the business of doing? Banks are in the business of making money. They're holding deposits, and they're loaning out those deposits in the form of, obviously these loans and mortgages. And so they're making money on the interest, okay? So those loans are the tools of the bank. The lines are our tools. These are the tools that we use. So today I'm going to go over that. I'm going to talk to you about it, and want to first, though, talk about the financial stress that we are all under, okay? Again, I talk about the fact that Americans are in debt. There's more debt now than there has been in eons, right? And obviously we have a greater population. There are more things out there to be purchased, and so everybody has to have the latest and greatest thing. And so we're always making payments, and we're making these payments thinking that, it's okay because somebody told me I can afford it. So when I went to that bank and the bank said, great news, you can afford this house at this amount of money, or great news, you can afford this car here. And of course it's, the highest, most loaded version, right? You can afford it, so go ahead and get it. And so what happens is we get ourselves in trouble, right? And so, while that wasn't necessarily Dan and my situation, We were more in debt due to our businesses and trying to get these businesses, up and running and going. And, the payments kept getting higher and higher. And then we were able to get ourselves out using Velocity Banking. So that's what I'm bringing you today. Ways that you can help yourself get out of the financial stress that you're feeling, because God knows financial stress is real. It is real, it is out there, and it hurts us. So stop being chained by your banks and use the banks against them. Use the banks against them. One of our subscribers is awesome, Silver Sleuth. He says, how does he word it? He says he's outbanking the banks. And I think that is such an awesome way to put it, because outbanking the banks is exactly what we need to do. So good one there, love it. Anyway, so financial stress is real, right? It's among the top 5 reasons that couples divorce, okay? And actually, that's the client that I worked with just a few days ago. She found herself divorced, and it was due to financial stress, okay? And she admittedly says, I spent too much money. And she said, I didn't listen to, what we could afford. And she's now in the position of having to, figure out her own finances on her own. She has an apartment now, and she's got to figure out her life, and she has to figure out how to do and run her banking in a way that she can afford it. So there's a lot of hurt going on there, but you know what? We're going to help her, and it's okay. All right, so we know that among the top 5 reasons that couples divorce is money. And if you really drill down into it, you guys, I can tell you that the friends that I have had that have gone through either a divorce or, an almost divorce, no matter what the cause, the quote unquote cause is, at the bottom of it, underlying somewhere, money is always an issue, at least in the situations that I have seen. So I think that that money reasons is actually probably the number 1 reason for the divorce. There might be some secondaries in there, but I'm telling you, there is so much of this out there, okay? So the other thing that I want to talk about when I talk about financial stress is communication with your partner. Dan and I ran a scenario the other day where we had a wife who did not want to tell her husband about the credit card debt that she racked up and that she endured, right? Because she was trying to better their situation. She was trying to start an online business or to get an online business going, and she kept digging herself further and further and further. And so I said, at some point it might work out for her, but at that point in time, it wasn't. And she was in a load of debt that we helped her, and actually helped them through. And the good news is on that front is she ended up talking to her husband, did tell him about the stress that, and the debt that she was in, and they handled the stress together. You guys, believe in your partner too. Believe in them, because you know what? They probably believe in you. And even if you've done something that probably wasn't a great idea, they know that your intentions were good, and they will probably help you. So bring that to them, you guys. Communicate with your spouse, communicate with your partner, talk about these things, because I'll tell you what, Dan and I, we bickered and we fought and we were really stressed out. And I mean, we probably could have gone that way too. We probably would have split had we not really found a good solution and figured out how to handle our debt, because we didn't know. And so finding Velocity Banking was the best thing that ever happened to us. And now it's like this incredible game, right? How to, as our subscriber says, outbank the banks was so much fun. And it is so much fun, and we love it. So again, we bring this channel to you. We bring Velocity Banking to you because we know it works. It works 100%, unequivocally, it works. All right. So financial stress, again, don't buy something simply because you're told you can afford the payment. Again, when we bought our first house right out of college, okay, we were right out of college. Dan was working for the car companies. I was working for the bank, and we had a loan officer that was actually really smart. And she said, just because the bank tells you you can afford something doesn't mean you can. And so, that did stick with us for many years. Unfortunately, we kind of got ourselves a little past that and kind of forgot about it, but we did think about that. And years later, I'll bring that up now and I think about it. And actually, she is the mother of a good friend of mine. And she told me that, and she told Dan that. And it's something that I think about now after, going through the situation that we had gone through. So just because somebody tells you you can afford it doesn't mean that you can. You really have to sit down and look at things, okay? Organize, identify, implement. our 3-step strategy for the pay down system, right? Organize, identify, and implement your strategy. So adding another job into the mix, just like the woman from the other day, adding in another job, granted, she was starting a new business, that didn't necessarily help her, okay? Again, it might help her down the road, but in the situation that they're in currently, wasn't a good time, okay? So when I say take care of your financial house first, get your financial house in order before you start or take on another endeavor. You guys, again, stop living paycheck to paycheck. Don't necessarily go get another job, because I'm telling you, Velocity Banking will help you. It'll help you get out of the situation you're in. And then later, if you feel like you want to, start a business or add that job, by all means do it. I say this again, Dan and I love creating businesses. We love creating products. That man has a million inventions in here that we have, prototypes for. Fun stuff, right? That is the fruit of life. That is what is fun, right? So keep those goals and by all means do it. But first, get your financial house in order, because that's so important. So stop living paycheck to paycheck. I know you guys are living paycheck to paycheck. Almost all Americans are. Very few people have money set aside, the 3 months to 6 months savings. There's less and less of that now. And so if something happens, people are going to be in a world of hurt, right? And so you can stop that, though. You can stop living paycheck to paycheck. And how can you do it? You can do it by Velocity Banking, okay? Velocity Banking it's like a godsend, and to me, at least I felt that way. Because once we found this and once we started running our finances this way, we cleared up so much. We cleared up stuff between us that we were struggling with. We cleared up our finances, and we can breathe easier once again. And I know you can too, okay? So I talk about the RLOCs, and I've mentioned the RLOCs before, right? The revolving lines of credit, and that we do Velocity Banking using those as our debt weapons, our debt destroyers, our debt tools, okay? Those are what we use, okay? So many of you out there don't have the option of a business line of credit, a home equity line of credit, okay? Or even maybe some of you can't get a personal line of credit. And if you can't, and all you have to deal with right now are your credit cards, okay? Let's talk about how you would repair your credit score in order to help you either get a card if you don't have one, or get a bigger line on the card that you do have, okay? And you can do this through Velocity Banking. Velocity Banking will help you increase your credit score, okay? So, Velocity using credit cards. If this is your only option, like I said, it is okay. Credit cards can help you get out of your debts, and they can help you get out of the situation that I'm going to show you right here. And it can also help repair your credit scores. But how do you do it? Number one, how do you help repair your credit scores? Well, and this is probably going to be, redundant, and probably a lot of you know this, but I'm going to go over it regardless, okay? So number one, you're going to pay your bills on time, all right? Velocity can help you pay your bills on time, believe it or not, because once you know what you have going on, and if you set your bills up to automatically draft from a credit card, they're going to automatically come out and they're going to be on time, okay? Number two, always review your credit card report for errors. There could be reporting on your credit card that you didn't know about that's causing errors and causing your score to drop. So definitely review your credit report for errors, okay? Three, catch up on credit card payments that are overdue. So if you think, you've got these payments out there that are overdue and you don't know what to do about it and you're just trying to slap more down on your credit, catch up on that stuff first. So catch up on anything that's overdue and get that handled, get that taken care of, okay? Also, secured cards, okay? People talk about using secured cards to help you build credit, to repair your credit. That may or may not work for you. It just depends on who's issuing that secured credit card and whether or not they report it to the bureaus, because I'm told that some of them do not. So make sure that if you go get a secured credit card and you're using it to fix your credit, that make sure that you're getting it from somewhere that does report it to the credit bureaus, okay? Number five, keep a credit line available. So keep some limit available to you, okay? So, and that's the other thing is, again, Velocity helps you with this, right? Because we're working down our debt as we do Velocity Banking. So when you work down that debt on those cards, you are then making more available credit to you, which is also cash flow, okay? And so you don't want to close any old trades. So people will go through their credit score, their credit report. Yeah, I'm like, what's that word? Credit report. They'll go through their credit report and they'll look at old trades out there and they're like, oh, I don't need these cards. I can close all these cards. Well, be careful with that. Maybe close some of the old store cards that are, old out there that are reporting on you that you don't use, but don't close any old credit cards because old trades are very good for your credit score. So keep those old trades out there, okay? And number 6, making multiple payments on your credit card will actually help you raise your credit. And I know this because I did it myself. So I handled, and I've talked about this before on videos, I handled all of our credit cards. So most of the credit cards were in my name, mostly because, I worked for the bank. So any of the cards that we got, I was there, so I would get them. And yes, I would add Dan as an authorized user. Okay, that's another way too that you can help your score, is if you're added as an authorized user to somebody who has, runs their credit well and has a good score. So, but just be careful, don't take their score in the process. So you can do that, right? You can be added as an authorized user. You're not going to do that, but I just thought it was funny. So you're not going to do that, obviously, but if you're added as an authorized user, yes, that can also help your credit score, okay? But making multiple payments on your credit score, on your credit card, that will help raise your score, and that did help me out. So again, as I was getting all these cards for us, most of the debt was in my name. And so I found that when I was making multiple payments to these cards, my score, which had started to drop, was then starting to increase as I went along, okay? And as I started doing velocity banking, that all raised, okay? So this is how you can help repair your credit scores. And again, velocity banking can help you, all right? So long as you're doing what we tell you to do and you're running your finances correct, it will help you. All right, so let's talk today about the client scenario that I had. Again, it is a woman who she ended up divorced, okay? And so admittedly, she says she probably spent too much. Again, you guys, communication is key. And it's something that, I don't want to hash over or go over and beat a dead horse, but I'll tell you what, she wishes she would have done things differently now, okay? Water under the bridge, done and over with. But, so here's what she has going on, okay? Recently divorced, she's got some debt here, spent more than she probably should have, right? Keeping up with the Joneses. There's a lot of keeping up with the Joneses, unfortunately. And so, I think sometimes women can actually, I seem to do this more so than men. It just seems to be, that's what I see when I talk to clients. So neither here nor there, just something I noticed. So income here, so her income is at $4,400 a month, okay? So she has a decent income. She makes $4,400 a month. Her total living expenses right now are for $4,308, okay? So $4,308 are her total expenses, and her cash flow is only $92, okay? Again, we know life happens, and so $92 isn't a heck of a lot of money to have when you have life happen and a situation comes up, and so she's got only $92 to work with, okay? So her rent here is at $1,256. Her car payment is $298, and that's at a 5% interest rate. The car loan itself is at $25,800. Then she has a personal loan, okay? So again, she's in a little bit of debt here. So she's got a personal loan at $18,010, and it is for $316 monthly at an 8% interest rate. So these are the debts that, now when I talk about credit cards, okay, and so her option is she can't get a personal line of credit, or she's kind of overextended, so the only thing she can use to start the velocity banking with is a credit card. So remember, when you're using credit cards, a lot of times you have to hold money out of your check, and so that's the case with her. Rent, she cannot pay through her credit card. Her car payment, she cannot pay through her credit card, nor can she pay her personal loan through her credit card. So these expenses are held out of her check, okay? And so that's what I have indicated right here, and that total is $1,870, okay? So $1,870 has to be held out of her income. Okay, so then she has 3 more cards, okay? She's got card 1 at $5,700, that's at $157 a month, and it is 21% interest rate. And if she were to pay only 2% on this card, which I think this is actually a little bit more than that, but 2%, it would take her, I think it's 18 years to pay off. So these cards get ridiculous after a while. And if you're only making minimum payments, you guys aren't going to get anywhere. And you're certainly not going to get anywhere fast. Okay? Card 2 at $89.60. And her monthly payment on that is $246, and that's at a 19% interest rate, which is why this card is, at a higher balance, because it's at, the lower interest rate, if 19% is considered low. But in terms of credit cards, it actually is. So that one is at $89.60, and again, that one's another one that if she makes a minimum payment on, she's looking at double digits, right? Teens. We're in the teens for years to get this card paid off. Credit card 3 is at $25.80. That's the balance on it, and it has a $75 payment at a 23% interest rate. Now, credit card 3, she has an available limit of $20,000, okay? And she's had that limit for a long time. She is able to get a convenience check on this. Surprisingly, I didn't know if she would be able to, but she is. So we are going to use this credit card to help us use Velocity Banking to help alleviate some of this alleviate some of the debt and to gain cash flow so she can start hammering down on these debts, okay? So before I forget, her living expenses are $19.60. All of these are chargeable. So all of these living expenses are something that she can charge, okay? So these are our chargeable expenses. So again, I talk about her limit, it's at $20,000, but again, she's using $25.80 of that. So what we have is if we add these cards together, okay, if we add the cards together, it's going to equal the $17,240, okay? Now, the convenience check has a fee, and that fee is at 3%, okay? But the 3% is only on these two balances, right? Because these are what we're getting the convenience check on. So if you take your $5,700 and your $89.60, you add them together, you're going to get $14,660. So then you multiply that by 0.03, and you're going to come up with 39.8 something. So I'm rounding it up to 440. Dan told me I have to round up, so I'm going to do that for him. All right, so 440 is the convenience check. So again, if we take the 17,240, add our 440, which is our convenience check fee, and we have 17,680 is what we're going to start working down. Now, give me just a minute. I'm going to erase some of this, and I'm going to kind of show you the math on this, and we're going to start Velocity Banking the pay down way. Okay, so I erased one side of the board here to give us some numbers so that we can kind of see the practical application of Velocity Banking, right, and the pay down way. So if you recall that we are going to pay off then some of these cards here, we are going to take the $20,000 limit that we have. Again, $25.80 of it is in use, but we're going to take these two cards, we're going to roll them then into this credit card, and she is going to get a convenience check, right? So we know we're starting with a balance of $17,680. So what does this actually do for her? Okay, so why this is where Velocity Banking comes in, and understanding the nuts and bolts of what Velocity Banking is and what it does for you, okay, and why it works. So the minute that we come in here and we pay this card off, okay, we pay this card off and this payment goes away, okay, we don't have it. That becomes cash flow, all right. This payment goes away, so now she's not responsible for that payment. Now card 2, we have to deal with card 2 then. So card 2, again, we take care of card 2, and then this payment, the $246, that payment is no longer a payment we have to deal with. That again becomes cash flow. So now card 3, $75 is our payment, and we are using this card, right? This card is our debt weapon. It's our debt destroyer. So we're using this, okay? And the minute that we put our income in, right? Because we know that when we do Velocity Banking, we're putting our income, our entire available income, which hers is $25.30. Once you put that available income on that card, it satisfies this payment. So these 3 payments are in effect wiped out, okay? Which then gives her, what? That's like over $400 in cash flow. So she now has extra cash flow to deal with or work with, where she only had $92 before, okay? Now, granted, she still has to pay her rent and hold that out of the check. She has to pay her car, and she has to pay her personal loan. So The idea behind all of this is eventually, as she starts using the velocity method and paying down her card, okay, so making that line more available to her. And now also, here's what happens, right? So card 1 and card 2, all of a sudden, those balances go away. So those cards, now that's more cash flow she has available to her. And what did I say down here? It says, keep credit available. Don't close old trades. So she's going to keep these cards open. She's going to have credit available to her. So that's helping raise her score. And once she raises her score enough, perhaps she'll be able to get then a personal line of credit to take over these two or one of them and continue to work her strategy, okay? So we organize our bills through pay down, right? Pay down debt solutions, our strategy, 3 steps. Organize, you organize your bills. We've done that here. We've organized her bills. You then identify what your debt destroyer is going to be. Number 1, it's going to be this card here. And then you identify what strategy you're going to deploy, okay? So she's deploying the strategy where she's taking her cards, rolling it into another card. She's going to continue to use this card, okay? She'll use that to put all of her, to pay all of her bills that are chargeable expenses, which we said, or all of her living expenses are chargeable. So she's going to charge everything. It is a rewards card as well, which is probably why it's, 23%, right? It's a rewards card. So she's getting rewards, and that the rewards on those cards, right, on credit cards, help defeat the interest that you're paying on the card, okay? So again, if we start with our balance, which is $17,860, that's the start of our balance. We then know that we're bringing in our income, right? So our income comes in, all of the income that's available to her is going to come into this card, and it is going to knock that balance down to $15,150, okay? So at the high, she's at $17,860, and at the low for the month, she's at $15,150. So we then have to know, we then know that her expenses are going to come out. So I've labeled it. Everything in blue here is our expenses. Everything in green is our interest. And everything in purple here is our deposit, our direct deposit coming in, okay? So where our interest then is at $315. How did I figure the interest? How do I know? How do I know what the interest is going to be? Okay, well, here's the thing. Credit cards and why they're so cool, right? Credit cards, revolving lines of credit, are all simple interest. And simple interest is calculated on your average daily balance, okay? And that's what makes them so powerful, because we can drop that interest as we go by making these big chunk payments. So in this scenario here, or in all scenarios with revolving lines of credit, which are simple interest, you take your high balance, and because they're averaging it daily, right? The banks are averaging that card daily to get your interest rate for that statement period. The easiest way we can really do that for you is to say, okay, you take your high balance, you take your low balance, you add the two together, you then divide by 2, okay? Obviously that gives you your average, you divide by 2. And then you're going to multiply by your interest rate, okay? But you're gonna take, and our interest rate's 23%, right? So if it's 23%, okay, we're going to move our decimal over 2 places, divide by 100, so it's 0.23, okay? So you're then going to multiply the average of those two numbers by 0.23, which gives you your year of interest. But we don't want the year, we want 1 month. So then you divide that number by 12, and that is where we're getting the interest for each of these months, okay? You're taking your high balance, then your low balance, you add them together, divide them by 2, you take that, you multiply it by your 0.23, and then you divide it by 12, and that's going to give you your interest rate. All right, so here at the starting month 2, we have $17,425, because remember, our expenses are coming out through the month, right? So that's why it's averaged. So you're going to have your gas bill come out, then you're going to buy groceries on a couple days later, and then maybe a day or 2 later, you're going to have your electric bill come out, and then you're going to have a couple days later your cell phone bill come out, whatever, right? So we're averaging. All right, so our income comes back in, right? Income comes back in, drops our balance to $14,895, and then we have our expenses come back in, we have our interest come back in, and then it brings us back to $17,165. Again, you drop it by your direct deposit that comes in, okay? You drop it, and then your balance then becomes $14,365, okay? and then our expenses again, our interest again. So we do all of this, right? And we keep it going. So where do we end up? So how long does it take her to get to freedom, right? How long till freedom? Well, 41 months, okay? It takes her 41 months to do it this way. Now you have to remember though, she has these other expenses out there, okay? So she's paying those and paying these. If there was a way to roll them all together and hammer it all down using her income, that would be fabulous. And that's where a home equity line or a personal line of credit would come in. However, the personal lines of credit, it's hard to get them above, $20,000. You can do it. You can. You have to have really good credit, and there's places you can go for that. You can do it. But the only option to her, and obviously she can't get a home equity line of credit, right? Because she's renting, she has an apartment. So if she could combine all these debts, it would be a lot faster. But in this scenario, these debts here are going to take her 3.4 years, okay? 3.4 years to get out of all this debt. Now, if you recall me talking over here where I said it was going to be like 18 years to pay this off, and similarly here to pay that off if we were just making minimum payments on that. And again, card 3, I didn't even calculate it for you, but it would probably be 4 years just by itself, okay? So again, velocity banking, it is the way to go. You guys, there is hope. No matter how stressed you're feeling, no matter what you're thinking right now, if you're in credit card debt and you haven't completely tanked your credit, there is a way, okay? There is a way. And part of that way is velocity banking. So I want to remind you too, remember, we are running a cash giveaway. And the cash giveaway is going to be the first week of December. We're going to then, do a drawing, draw out all of the people that emailed us, okay, to qualify for it. Number 1, we want you to be a subscriber, so you have to subscribe. And number 2, send us an email to info@paydowndebtsolutions.com. And in the subject line, just have it say giveaway and then your handle for wherever you're at. If you come to us from Rumble, you're going to put the Rumble handle. If you come to us from YouTube, you're going to put your YouTube handle on there. And it's our way of giving back to you. You guys have been awesome. We're so happy that we can help people out. It's, I know we've changed lives and I want to continue to change more. And if part of that is going to be a giveaway during, the Christmas season, then I absolutely want to do that for you. Have an awesome day, you guys. We'll see you on the next one.